I would submit the only reason that it makes sense to suppress silver that way, to the point of throwing a head trader at JP Morgan in jail and still allowing their company to be that year that they did that they paid the $920 million fine, the JP Morgan metals desk made $1 billion. So they walk away 80 million up. They're traders in jail, and they're still allowed to be the custodian of the world's largest silver trust and the fourth largest gold trust. Who's partnered with JP Morgan in SLV? Oh, that's none other than BlackRock. So you have these very big players, these insiders, suppressing the price of silver, and I believe it is so that they can continue to make weapons. And countries like India and China know what we're doing. India has imported over 700 million ounces of silver in the past 2.5 years from the West, and they just bought over $1.5 billion worth of silver from the UAE.
Hey guys, welcome back to Capital Cosm. Today we've got fan favorite Andy Schectman back on the show. Andy, thank you so much for coming on, man.
Danny, always good to see you, brother. Thanks for having me.
How have you been? I know you've been out on vacation lately, so glad to have you back.
I've been good, and it's true. I did take a little bit of an unplug vacation, and I always think about lately, at least since 2020, man, how fast the world is spinning. I think way back in the day, like years ago, we would see an event that would happen, and it would be months on either side of that event, and it would get tremendous fanfare, but there would be just one event, one big event. And now it seems like there's events every day. And you asked me before we started recording here, did I really unplug, or did I read the news? And I have a hard time not staying on top of the news, because it just seems to me like like life is a roll of toilet paper, man. And it's spinning faster and faster and faster and faster as we get closer to the cardboard. And, you don't notice it spinning when you're young. I don't know about you, but I don't know if it has to do with age or just where we are in the cycle. But it seems like things are spinning so fast that even if I unplug for a day or two and don't continue reading and staying on top of this stuff, I feel like I'm so far behind. I'm trying just to catch up. I think it's a sign of the times, man, where there's greater volatility. And it's funny because if you look at markets, often markets that make a big move in any direction are preceded with great volatility. And I think you could say the same thing about life right now. There's tremendous volatility, and what does it mean for what's in store for us is kind of the spooky part. And there's a lot that could change one way or the other with the big BRICS meeting in October, with the election in November, and God knows what is in store for us in terms of volatility and as the Chinese curse says, interesting times ahead between now and the election, and then after, depending upon the results. So yeah, it was nice to unplug and sleep late, but I found myself sitting by the pool reading stories from around the world. I just can't let myself let go of that. But hey, that's why we're here talking, because there's a lot to talk about, brother. There sure is.
Yeah, I tried to unplug about a couple of weeks ago. I took an hour and a half nap, and I woke up and I saw like someone took a shot at Donald Trump. So that was the last time I tried to unplug.
Man. You can't sleep on the job, dude.
No, I can't. Well, hey, before we get started, guys, I'd like to remind you to hit that subscribe button if you haven't already, to get more guests like Andy on the show. And if you're enjoying this content, it also helps me out quite a bit. Thank you so much for watching, and I appreciate your time. So let's just dive right in, Andy. What is kind of like your macro view in the economy right now? I haven't talked to you in about 2 weeks now, 2.5 weeks. So what's kind of like your take on the macro scale?
Well, on the macro scale, it's murky. I mean, I don't say that as a cop out. It's just very murky to me. I mean, there's so many things. You got the Federal Reserve that has come out and admitted to $1 trillion in paper losses right now, in unrealized losses. You have a situation where the stock market has turned sour on the big seven, and that's a dangerous environment in and of itself, where the market has been lifted by 7 stocks. And here's the interesting thing right now, if you look at the NASDAQ, which has been hit fairly hard, um, in just doing a little bit of research on it, you find that there are more industrial stocks right now listed on the NASDAQ than technology stocks. And in fact, even more financial stocks than technology stocks on the NASDAQ. And I found it interesting when we talk about breadth, BREDTH, and how horrible it's been, where typically when you have just a handful of stocks leading the way, it doesn't portray for good future direction. Typically it's a bad omen, and we're seeing it turn over right now. Will it continue to fall? I don't know. But just so people understand what I mean by breadth, if you had randomly chosen a basket of 30 tech stocks at the beginning of 2022 in the NASDAQ, you'd be down today. And, almost all of the stocks in the NASDAQ have been in a bear market since late 2022, with the exception of a handful. You look at the Russell 2000, a broader swath of the economy. They represent the broad economy. Almost all of them are down. And so when we talk about the macro picture, look, we have a situation where now you got the Fed talking about lowering rates. What does that mean? We have a yield curve which has been massively inverted for 2 years. And the inversion of the yield curve is basically, if you said to me, Andy, can you borrow me some gold? Can you borrow me $5,000 worth of gold? And I said, okay, Danny, how long do you need that for? 6 months. All right, I'll charge you 2%. Okay, great. And then you come back to me and say, Andy, can I borrow $5,000 worth of gold and pay you in 10 years? Okay, Danny, I'll charge you 8%. Well, the inversion of the yield curve says you're getting a higher rate on the short loan that I'm lending to you versus the long loan. And who would ever? It just doesn't make sense, right? You're supposed to get more of a return for the longer the duration. Not only is it the greater likelihood you don't get paid back because of the variables, but the opportunity cost of not having use of that money for a longer period of time. And that's what inverted means. For the last 2 years, you're getting paid more money on a 90-day or a 6-month treasury than you would be on a 10-year treasury. That's a very unusual situation. But going back to 1950, Danny, every single inverted yield curve, once it reinverts, once it goes back to normal, where you're getting paid more on the longer maturity than on the shorter, every single time since 1950, I don't know how many it's been, 8 or 10 times, it precedes a recession. And in other words, what you're seeing is the high probability of a big recession coming. And the reason I say big recession is because it might have been, I think, the most inverted yield curve in history, massively inverted for a very long time. And when it reinverts, the probability going back to 1950 would be 100% if you look at what it has been in the past. I guess it doesn't mean it's exactly 100%, but a high probability we're heading into a recession. And so when you see the yield curve reinverting, to me, what that basically says is that you have big money who understand the banks. The banks are not lending the money to you and me. The banks are not lending money to you and me to start a business, to buy a property, to do a home equity loan. They would rather take that money and not lend it out into the economy because they don't like what they see coming. And instead, they're loading up on short-term treasuries, which is pushing the yield down. So as the yield goes down in the short-term treasuries, because the big money, the banks would rather put it in there with safety by treasuries than lend it to you and I, is an ominous sign. They are front-running what they see coming. And so they're anticipating that the Fed will lower yields on the short-term treasuries, which they're going to do. And so when you talk about what this really means, I mean, if it is portraying a recession and the economy starts to slow down and the banks aren't lending and instead are going into treasury short term because they know that things are going to get ugly and they don't want to lend it, and we head into a recession, yeah, I think that you'll see rates go even further down on the short end
Mm.
because it will start to really clog up the economy, really, really slow down the economy in a big way, create a recession, if not worse. And then you have this urban doom loop that I think people need to understand a little bit more. This urban doom loop, which, you got all of these half-empty buildings. And 70% of the loans are owned by the regional banks, as are 70% of the small business loans. And these banks are these buildings are half empty. And all of the shops and restaurants that have spawned up around these big buildings, these office buildings. Well, you throw into it the lawlessness in the inner cities and all of the immigration problems in the inner cities, and the fact that people aren't in these office buildings. So what happens is the people in the office buildings start to go work from home. The people around the businesses around the offices, well, they start to suffer and start to close. So people start to leave. And as people leave, you end up having less in the way of tax revenue, the tax revenue that comes in as a result of all of these commercial properties and all the businesses, which is integral to services within the economy. Well, they start to suffer. And as a result, the quality of life starts to suffer. So people leave. And it's a doom loop. And it's getting worse and worse and worse and worse. And I often talk about that. I mean, the craziest one I've seen so far is the one in St. Louis, the former one AT&T Center, 44-story tall building, third biggest building in St. Louis, and sold for $205 million in 2006. It just sold for $3.7 million. $3.7 million for the fourth tallest building in St. Louis. And as it gets worse and worse and worse, and more people leave, less tax revenue going to the police and the fire and all of these services, garbage collection, whatnot. Well, then the quality of living gets worse. So more people leave, which just reinforces this urban doom loop. I hate to be pessimistic, and we were talking about that too. There's a fine line between realism and pessimism. But I think if you don't see what's coming, you'll never get out of the way of it, Danny. And so, unfortunately, I'm a hopeful guy, but I don't like what I see right now. And when you see the Fed talking about lowering rates, and you see the curve reinverting as a result of the banks not lending money and just piling it into short-term treasuries because they do not like what they see coming. So instead of lending it with risk, they'll put it with the Fed and no risk. Yeah, I would say we're in store for some tough times. And then you throw into it the biggest election in the history of this country, and all the crap that's gone on around it. Yeah, it's time for people to be defensive, in my opinion. It is not about return on your money, it's return of it. And when we start to see cracks in the NASDAQ like we are in the big seven, which have really been the catalyst for all of the market growth, um, it's dangerous because people in this country have become addicted to instant gratification, and that's not fast enough. And so you have all these people that have loaded into Nvidia and into Apple, and what does it mean when they correct? If they do really correct, it's a big problem. So yeah, unfortunately, Danny, my take on the economy is not as rosy as I would like it to be right now.
Yeah, a couple questions to follow up there, Andy. You mentioned a doom loop. Wouldn't that also precipitate the government raising taxes to make up for the loss of tax revenue? And
Yeah, of
wouldn't the
course,
the tax hikes even that'll just be another layer on the cake, right? That'll just cause more incentive for your productive class to leave, which it
of
kind of like
course.
if it speeds up, this doom loop. And then in terms of rate cuts, do you see rate cuts already being priced into the gold and silver price right now? You're looking at about 100% chance of a rate cut in September. Has that already been priced in, or is that yet to be priced in?
I don't think that's really been priced in as much into the gold market because, again, fine line between conspiracy and reality. But when you take a look at what has happened, in fact, let me just read to you exactly, if I have it here, what has happened with the price of gold. Price of gold and silver are managed by the commercial banks. And I mean, that's the truth of it. The commercial banks are the ones that control the price of gold. It's controlled on COMEX. That's ending because the big money across the globe understands this. The central banks have been using the Western suppression against us for a very long time. They know this. In fact, I've said before, the head of the Shanghai Gold Exchange says, when the real price of gold, when China is allowed to speak at the table, the real price of gold will be observed. They talk about the new grain exchange that they just developed, the BRICS grain exchange, and they say, we produce more grain and soft commodities than the West does, yet we have no control over its price. It's all controlled on COMEX. That will change with the new BRICS grain exchange. They understand that we have been controlling the paper price of all of these commodities for a very long time. But I'll give you an example of what just happened. I see if I can pull it up here. I was just reading it. There's a tremendous amount of short covering that has happened on the market. And I just want to find it. I'm sorry I don't have it at my fingertips. Okay, here it is. So the Commitment of Traders report just showed that the managed money crowd for gold and silver futures have been fleeced. That was the gist of it. And the gold longs sold 4.488 billion in long futures, silver longs 1.7 billion in futures. These are the managed monies. And so leverage is a double-edged sword. So look, here's the deal. There's the commercial banks, what they do is they suck in the speculation. They let the price run, and they will suck in all the managed money, and they'll absorb all of that buying pressure. But they have enough money where they are able to sell into a rising market. Very dangerous thing to do. Most people, when they short, think AMC and GameStop, they short a falling market and pile on, right? It's like, when you played tackle football with your buddies in elementary school, everyone would jump on, pile on, hog pile. Well, that's what normal people do when they sell short. The commercial banks have enough money and really unlimited amounts, and they do it in a collusive manner where they are able to absorb all of the buying pressure, let the price rise, and then start to sell and overwhelm the buying pressure and drive the price down. As they drive the price down, all of those longs and all of the options expire worthless, and you get all of the managed money that end up jumping ship. These hedge funds do not have a high pain tolerance. So as the price starts to go against them, they jump ship. When the longs sell their longs and cover their shorts, in other words, they're getting out of their short position, they're selling their longs. The opposite side is the commercial banks. They're taking those longs and they're going long. So in other words, one of these days, and I believe we're getting much, 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 much closer to it, the commercial banks, and maybe this is the time, who knows, will flip-flop and they won't short a rising market. They will push all of the managed money to the other side of the table, as right now they're in the process of moving to that side of the table. And they won't let the price, they will not let the managed money back into it. In other words, managed money will go short. Right now, when the managed money sells their longs and buys shorts, the commercials are taking the other side. And that's what has happened. So the commercials drive the price down. They cover their shorts on the way down. They take the long positions and take the opposite side of the managed money short position. So they're net long. And the question is, will they this time let it run or not? As it goes higher and higher and higher and higher, and the managed money then flip-flops and goes into the other side, will they short the rising market? That is the question. That's the big question. And I think it's very difficult for these banks to consider shorting a rising market in this environment when the rest of the world is standing for delivery. But the reason the price fell has nothing to do with anything other than the fact that the commercial banks clobbered it, literally clobbered it, and got almost 5 billion in gold futures sold and 2 billion in silver futures sold in a week. And that is having, as usual, a profound effect on the price of gold and silver. It is this environment that the Chinese and the Russians and the Indians and the Saudis, they understand what we're doing, and they are using this suppression against us by standing for massive, massive, massive delivery. And we see that continuously. So this game ends, and it ends badly. And I don't know if it ends now or later, but it's to a point where because the rest of the world is looking at commodities as being far more valuable than the paper currencies that purchase them, and they're using the exchanges and their delivery mechanism to reposition, it becomes very dangerous to hold short positions. So this is a short-term deal as far as I'm concerned. Yeah, technicals are not wonderful right now, and that's part of the deal. The commercial banks are able to paint the tape, make the technicals look bad, get the managed money to capitulate and sell, and allow the commercial banks to take the other side of that. So yeah, it's a little bit of an interesting dynamic, but one of these days, and I think we're getting closer than we've ever been, the commercial banks will make more money on the upside than they did on the down, and they'll let it run, and they will fleece the managed money like they did here. The question becomes now, as the price rises and the managed money then starts to go long, will the commercial banks really step on the shorts and like they've always done, rinse, wash, and repeat? But they've been able to do that because the world never stood for delivery. No one ever stood for delivery on COMEX or the LBMA. And, on the LBMA in London, where they're trading right now almost 3 billion ounces of silver per day. That's 3.5 times annual global mine supply. They only have 300 million ounces that are not encumbered. There's 800 million ounces there. Total 500 belongs to the ETF. So they're trading 10 times the amount of gold or silver they have in the vaults every single day. And that is all rehypothecation. That is all fractional. That is all Bernie Madoff. It's a scam. And the same thing is true on COMEX. Silver is rehypothecated 1,600%, meaning if 16 of us have a contract saying that we have 5,000 ounces of silver and we all stand for delivery, one may get delivery, 15 will get cash settled, and that's force majeure. That's a default. The exchange blows up. That's how close we are. But the fact that these countries, these sovereign nations and sovereign wealth funds are standing for delivery is the key to it all ending. And we're getting closer, not only in environment, but also in the understanding by the big money across the globe that this is how they win the game. They don't need to send missiles to the United States to win. They just need to sell treasuries and buy commodities. And that's what you are seeing in a slow, methodical way.
Yeah, Andy. So, what is kind of like the incentive behind keeping the gold and silver price down? We've heard, I hear from my comment section all the time. It's like, well, you guys talk about manipulate prices all the time, but kind of explain to the audience why they would want to keep the prices down.
Well, for a very long time, it was done for something called Gibson's paradox. Gibson's paradox is the inverse relationship, in essence, between real interest rates and the price of gold. And if you are going to maintain an environment of very low interest rates, see, it's the interest rates, it's not the gold manipulation, Danny, that matters. It's the interest rate manipulation that we've seen for 20 years, where suppressed interest rates have created an illusion of prosperity, where your home prices, your stock prices, your 401k, everything went higher in value. And that's another big problem, by the way, for the commercial real estate industry, where all these buildings were purchased at the lowest interest rates in American history. And now that rates are moving higher, on the long end, what does that mean for these values? And that's another big issue. But the bottom line is that for 20 years, we suppressed interest rates. By suppressing interest rates, we created this perception or this illusion of prosperity. And so if you have suppressed interest rates, why then you have to step on the price of gold, because by stepping on the price of gold, it signals strength in the underlying currency, strength in the bond market, as illusionary as it would be. Because if you are going to have nothing in the way of interest rates, of zero on the federal funds rate for all of those years, then there's no opportunity cost in buying gold and silver. And that's one of the reasons why they would step on it, to promote an illusion of strength in the bond market and in the dollar market. And what it really is it's a barometer on the health of the system. The higher the price of gold and silver goes, it shows the flaws and the fragility in the underlying markets. And I think that's kind of the problem, is that these commercial banks have done this for so long, created such massive short positions that they're trying to slowly, I think, extricate themselves from these very, very large short positions, some of the largest in the history of the COMEX market. I mean, as an example, I'm going to show you something. I don't know. Am I able to share my screen with
Yeah,
you?
go ahead. Go for it.
All right, hang on. Let me pull up this thing first. Hang on. Because I want to be able to kind of answer this question in a different way. So let me find the chart. Here it is right here. Okay, so let me share my screen. I think this is it. Can you see that?
It's loading. Let's see. I don't. Oh, there it is.
Okay. You see this chart? Let me make it bigger.
Yeah, if you can maximize it.
Let me make it bigger. All right, you see that?
What's it? Yes, it's right there.
Okay. So what this chart is here, this is the COMEX market. This is a, a presentation I gave at Rick Rule's conference recently. And these are all the commodities that you see. These are commodities traded down here on the COMEX. This is the red line are the top four banks, big commercial banks, and the green is the top eight
Okay.
combined. This is the short position in silver,
Oh
the
my.
largest concentrated short position in any commodity ever traded on the COMEX market by eight banks. You tell me what the hell is that for? Why would look at oil
Exactly.
over here? Corn, sugar, soybeans, cotton. Why would you have eight banks that represent the largest concentrated short position in the history of the COMEX? Look at the top four shorts: silver, platinum, gold, palladium.
Interesting.
Why are they shorting the price of all of these metals? And that is the question that people need to understand. And so let's take a look at the next chart. This is how the rest of the world is using this against us. This is the amount of silver held in the LBMA.
Hmm.
The rest of the world says, fine, you guys, now that we're wealthy enough and industrialized enough and coordinated enough, you guys want to short the hell out of the paper price? Go ahead. This is what we're going to do. We're going to stand for delivery and drain your exchanges. That's exactly what they are doing.
Yeah, it's
They
next to
are
nil now.
using suppression of the Western paper market against us. They know what we're doing, slowly draining the vaults. So it's now here's the reason I believe, I'll show you one more. Here's a reason that I believe they are doing this with silver. All right, do you see that?
Yep.
Okay. If you Google this subcommittee meeting S.2768, you'll read it. It was a bill in 1942. This was a congressional hearing. And take a look at the to the right. The present consumption, this comes right out of this subcommittee meeting. I mean, Google it. You'll come right up. The present consumption of silver for war purposes is at the rate of about 100 million ounces a year and is growing rapidly. According to the War Production Board, it is only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. That's 1942. Now, they used to calculate military demand within the supply demand fundamentals, right? So in 1942, a subcommittee meeting in front of the Senate says we need up to 200 million ounces of silver per year. Now, how much more advanced technologically is all of our weaponry today? Look at this. Here's the current supply demand numbers from the Silver Institute. What do we see missing? Industrial, electrical, electronics, of which photovoltaics, that's
Can you make
solar
it a little
panels.
bigger, Andy?
I can't make it bigger. That's as big as it will get. You can't see that?
It's fine. It's fine. Go ahead.
I wish I could. It's fully maxed. So here's what it says. This is the supply and the demand. And the demand, industrial total, electrical and electronics, of which photovoltaics, that's solar panels, brazing alloys and solders, other industrial, photography, jewelry, silverware, where's military? So now let's go back to this. Why the hell do you have eight banks with the largest short position in the history of the COMEX market on silver? Oh, yeah, because we need silver for military, yet why aren't they showing us within the supply demand numbers that are published
Interesting.
by the Silver Institute any military applications whatsoever? So the moral of the story is what I'm trying to say to you, Danny, is that there's a reason they're holding down the price of silver. The price of gold is the canary in the mine shaft. The price of silver is integral to military equipment, high-tech weaponry. I gave a couple of speeches 2 years ago, starting one in Vancouver, where I said there's 500 ounces of silver in the tip of a Tomahawk cruise missile. And this guy comes up to me after my speech and he says, "Yeah, I actually developed the Tomahawk. I work for the Department of Defense." He says, "I'm not sure how much silver's in it, but you might be right. I'll get back to you." Never heard from him again. I go in January it's the J. Martin Conference, Vancouver Resource Investment Conference,
Mhm.
VRIC. It's one of the two I go to. It's fantastic for your listeners. It's in January in Vancouver. Kind of a crummy time to go to Vancouver, but not if you like to ski. I usually go a few days early and go ski up in Whistler. It's an amazing place. Anyways, he was there again. And I gave this speech and he came up to me, showed me all these pictures. He said, "Look, it's all declassified, but you're right. I'll be damned. You're right. There's between 13 and 14 kilograms of silver in a Tomahawk cruise missile." And he showed me pictures. He's like, "Yeah, our biggest challenge was getting it to shoot vertically instead of horizontally because they used to come out of
Mm.
submarine tubes. But now we shoot them vertically." And he had the platform off the coast of California, all these things he was showing me, all declassified. But he said there is. So my point is, if there's 500 ounces in a Tomahawk, how about all of the missiles? How about all of the stealth bombers and the high-tech aerospace and the submarines and the stuff that is used in space program? All of this needs silver, and it's ignored by the silver supply demand fundamentals. And if you believe, as I do, that the military-industrial complex is far more powerful than the presidency, um, then that would underscore. Now let's take it a step further. You had J.P. Morgan, who is now it's the custodian of the world's largest silver trust, SLV. They're also now part custodian of GLD, the fourth largest stockpile of gold in the world. And they paid a $920 million fine 2 years ago for suppressing the silver market. And their head trader, Michael Nowak, who I know is in prison for doing such. And yet they're still allowed to be the custodian of the world's largest silver trust. And there's a video that I think everyone should watch. Those who want to know about manipulation, I'll put it to an end right now. All right. Everyone needs to Google Chris Marcus, my good friend Chris Marcus of Arcadia Economics. I had lunch with him yesterday. He lives down here in Florida, one of my dear friends, and a hell of a journalist. Well, I call him a journalist. He's an investigative journalist. He's a YouTuber like you are, but he's done some amazing work in terms of investigating work. And his best was an interview he did with Bart Chilton. And you'd want to Google Arcadia Economics, Chris Marcus, Bart Chilton, Chilton. Bart Chilton was the former head of the CFTC, the Commodity Futures Trading Commission, the commodity police. And he gave an interview to Chris Marcus. And in the interview, he said, it's the only one he gave like this. And he said, "Yeah, when Bear Stearns failed, Hank Paulson and Ben Bernanke called Jamie Dimon into their offices. And they said, 'Jamie, we need you to take Bear Stearns short position in silver. It's the largest short position on the COMEX, and it's huge, and we need you to take it.' And Jamie said, 'Okay, guys, I'll do it, but JP Morgan will be in violation of position limits if we do.' 'Okay, Jamie, no worries. We'll give you like 90 days to get your house in order.' Okay, cool. Off he goes. He takes over Bear Stearns short position, the largest silver short position to that day that we'd ever seen. At the end of the 90-day period, Bart Chilton goes into his superiors and says, not only have they not decreased their position, they've increased it. They are in both a violation of our agreement and of antitrust law. They need to be prosecuted." And he publicly sang all of this to Chris Marcus on this podcast. And he says, "I went into my superiors and I told them that, and they said, 'Bart, back down. It's a political decision.'" Now, let me just back up for a second. If you have 4 and 8 banks short the largest concentrated short position of any commodity, which is collusive, which is a violation of antitrust law in and of itself, you can't have a collusive concentrated short to control the market price. Back down, Bart. It's a political decision. So much so then that they find J.P. Morgan illegal. I mean, or they fine them $920 million for manipulating the market. They send their head trader to prison, yet they still allow J.P. Morgan to run this fund. Now, when Bart Chilton said this and then admitted it to Chris Marcus on his podcast, which is still out there for people to read, he died a week later. Now, I'm not saying it's tied together. Maybe it is, maybe it isn't. My point to you is simply this. You have the head of the CFTC who admitted all of this, that Jamie Dimon did in fact take the short position, that they were told to lower the position to get it in line with, with position limits, and in fact increased it, was told to back down, admitted all this stuff, and he's gone. Now, all I can simply tell you is this. When you want to know why is the market manipulated, it's probably a whole lot deeper than any of us will ever know. But I do know this. In this environment, to have 8 commercial banks have that concentrated of a position in a commodity that the world is accumulating. We just found out that China is buying up all of the doré bars in South America in silver. And those doré bars that they're paying way more than the West will pay for it, they're scooping it all up, sending it to China and refining it there. And that does not affect the silver price because it's not refined. So it's unrefined silver. They're paying way more than the West is. And this has been verified by several sources, including sources at First Majestic Silver. This is a situation where the Chinese understand what is happening, and they are using this suppression against us, whether it be by draining the LBMA, which has its lowest amount of silver in 140 years, draining the COMEX, which continues to see gold and silver be delivered off, backdooring it out of the ETFs because only the very, very, very large basket participants are able to take metal out of the ETFs. If you're a sovereign wealth fund, you can do that. And at the same time, look at the Shanghai Metals Exchange. Their silver is literally falling off a cliff at a 45-degree angle. So the rest of the world understands what these stupid 8 Western banks are doing. But I would submit the only reason that it makes sense to suppress silver that way, to the point of throwing a head trader at JP Morgan in jail and still allowing their company to be that year that they did that they paid the $920 million fine, the JP Morgan Metals desk made $1 billion. So they walk away 80 million up. They're traders in jail, and they're still allowed to be the custodian of the world's largest silver trust and the 4th largest gold trust. Who's partnered with JP Morgan in SLV? Oh, that's none other than BlackRock. So you have these very big players, these insiders, suppressing the price of silver, and I believe it is so that they can continue to make weapons. And countries like India and China know what we're doing. India has imported over 700 million ounces of silver in the past 2.5 years from the West, and they just bought over $1.5 billion worth of silver from the UAE because they have a treaty with the UAE that allows them to import silver at a much lower duty import tariff. And this is, again, these BRICS countries using it against us. Why would China go into South America and buy up all the doré bars and pay hundreds of dollars per ounce or per ton more than the West would? I mean, way more than the West would ever do it. And they're scooping up all the doré and refining it there. Why? Because they understand the importance of silver, and the military industrial complex has been controlling it for a hell of a long time. And that's why they're doing it. Gold is more of an issue of the bond market and the dollar and the big picture strength of the Western system. But silver is a whole hell of a lot more strategic, and they're using it because it's needed to continue the endless wars that we are part of all around the world.
Yeah, oftentimes people forget that silver is by and large a commodity, meaning it's an industrial metal, whereas gold is just purely a precious metal. Where do you see this ending, Andy? They can't keep the price down forever, right? This has to unwind at some point. So what do you think is the end game here? What do you think eventually transpires?
I think the only way you can manipulate a market over an extended period of time is to push it in the direction that it is going. And I think Zoltan Pozar is right, Danny. Zoltan Pozar says we're in Bretton Woods 3. He's one of the smartest analysts I've ever seen. He understands the plumbing of the system maybe better than anyone. He worked at the New York Fed. He's at UBS now, I believe. But he says Bretton Woods 1 when we took over for the pound sterling, Bretton Woods 2 when we became the petrodollar, Bretton Woods 3 a system all about commodities. And so take a look at, for example, the Belt Road Initiative, the largest infrastructure project in history, 175 countries, or 150, 60 countries, 75% of human population, 50% of global GDP right now. But these countries are mostly under industrialized, and they're very resource rich. So China comes in and strikes deals with all of them. They just bought the London Metals Exchange, which is the base metals, and they're now warehousing or building warehouses in China to warehouse the metals traded on the London Metals Exchange that the Chinese now own. They're striking deals all around the world cooperatively for oil, for precious metals. China last year refined 100% of all the rare earths. 100% they refined. We have no manufacturing capability here or refining capability. China, 100%. They're responsible for mining 70 or 80% in the Eurasian continent of all the rare earths. They produce more grain than the West does. They're striking deals across the globe in soft commodities, hard commodities, base metals, precious metals. This is a situation where they are using the suppression of the COMEX markets to reposition in commodities. So it ends in a place where, look, it's interesting. You look at the United States, they're like, we're broke, we're insolvent. And now we're supposed to believe that the United Kingdom is like all of a sudden really interested in buying our treasuries, along with Ireland and the Cayman Islands. But you look at a country like the United Kingdom. They just recently published a letter saying we're in trouble. We have no manufacturing capabilities, and nor do we have any of these natural resources. We're reliant upon the Eurasian continent. Well, so are we. And so we're selling our treasuries. We're broke. We're insolvent. We're creating $100,000 of debt every second. One, two, three, four, five, six. Keep on going, and don't stop. And you'll get to $1 trillion in 100 days. That's how much debt that we are. Well, you won't because, yeah, you will. Because a trillion seconds ago is 31,688 years ago. I guess I haven't divided that by 100,000, but it should be somewhere near 100 days. And that's how much debt we're creating on top of the nearly 200 trillion that we already have in funded and in unfunded liabilities. So we're selling our treasuries to like the United Kingdom. And the UK is a broke country as well. Neither of us have manufacturing capabilities. Neither of us have much in the way of these natural resources that we need or the ability to exploit them and refine them. So we sell our treasuries to the UK, one broke nation selling it to another broke nation who pays us just so we can pay the interest on the debt we already have in existence to keep the lights on, and then take the rest and send it to the BRICS nations to buy commodities, who in turn are selling treasuries that they used to put all their reserves into and taking those dollars and buying gold, which we just found out. What did we talk about last time we were together? The new unit currency, which will be traded over the M bridge, which is 40% gold backing, physical gold held within their own borders. And if you look at the white paper on the unit, the gold is held within the borders of the country that creates the unit token. In other words, it's independently audited, but not sent to a place like Moscow or Beijing. It's held by the countries that make the unit tokens, and it's deliverable. So gold will be part of a new system. Gold is the only other tier one asset. And look at the countries. I have a list of it right here. The countries that have in the past year and a half, most of them recently, taken possession of gold, taken possession. So it's one thing. See, all of these countries have left their gold at the Bank of England and the New York Fed, which gave them immediate access to the COMEX in New York and the LBMA in London. And you keep in the Bank of England, the New York Fed, you have stable jurisdictions and Western rule of law. And now, over the last 100 days, the combined volume of the Shanghai gold market and the futures market, both gold market is cash and carry. They have a small futures market. It has gone up by over 200% and is now surpassed the COMEX market in terms of volume. It's now the number 2 heaviest traded volume in the world for precious metals. But so you got all of these countries that are buying gold hand over fist. And then the most important part is Germany, Austria, Slovakia, Argentina, the Netherlands, Saudi Arabia, Hungary, Belgium, Egypt, Senegal, Romania, Nigeria, Poland, Ghana, India, who bought 1.5 times the amount of gold they bought all of last year, which is a record year just in the first 4 months of this year, brought it home along with 100 metric tons they've held at the Bank of England since 1991. Turkey, France, Serbia, Venezuela, Algeria, Cameroon, South Africa, Czechoslovakia, just to name about 30. There's more. They're all repatriating their gold and buying gold because they know it will be part of a new system. Why did the BIS reclassify gold as the world's only other tier one asset? because it's going to be something that is very important about what comes next. They wouldn't have done it otherwise. Between the reclassification, the massive central bank buying spree, and the repatriation, taking it away from where it was always kept because it gives access to the Western system, who now has lost all of their trust, and a new system is arising out of the BRICS and traded over Project M-Bridge, as we talked about, which is the cross-border payment system that is free of the SWIFT interference, that Saudi Arabia has become a full participant in, that the Bank of International Settlements is backing. So the BIS, who reclassified gold tier one, who told all the banks to bring their gold home and incentivize them all to buy it, is backing this new system. So where does it all go? I don't know, brother, but I think gold goes a whole hell of a lot higher than people think, because it will be pegged to a new system and then it will never come back. And I think silver is needed in military, in green, in industrial. And the thing of it is that when these exchanges for years, no one ever stood for delivery, ever, in the 140-year history of the LBMA, and since 1974 on the COMEX, less than 1% stood for delivery. That is how they're beating us. Let the West suppress the price. They're stupid. That's what they're saying. And in a coordinated fashion, slowly, not too fast. Remember that chart I showed you of the silver? It's been going for the last few years. They're just draining the exchanges using the stupid price on the West. But you can slowly see that Shanghai is now becoming more and more and more and more credible and has now outpaced COMEX. So at some point, when the Western prices, a system that can put oil at negative $40 a barrel in 2020, I mean, really? How the hell does that happen? Well, it's because it's the futures market controlling the price. And at some point, I think all of these countries across the globe say, I'm done, we're done using the COMEX. It's a Ponzi scheme. Just like Bernie Madoff was the greatest thing in the world until he wasn't, that's what the COMEX and the LBMA is. When the LBMA can trade 2.9 billion ounces of silver per day, 3.5 times global mine supply, that's why their inventory has fallen off a cliff, because they're suppressing the shit out of it. And the rest of the world is now smart enough, coordinated enough, wealthy enough, cunning enough, and they're using that against us. They never were. Most of these countries were third world as far, 15, 20 years ago. And now all of a sudden they're wealthy, coordinated, sophisticated, and have the desire to stand on their own. And they do that by accumulating all the COMEX and the LBMA commodities using the suppressed prices that we have used forever. And they're using it against us. So this ends in a way where prices go a whole hell of a lot higher. When does that happen? Don't know. Should have happened a long time ago. But you can see the world is wise to what we're doing, and it's going to end.
Yeah, and it does feel like something's changed. I mean, we did have a little bit of a sell-off in gold and silver recently, but gold is right back up to that $2,400 range at the time of this recording. Silver's at that $28 price zone, which as of a few months ago would have been considered, the some high peak, right? So you're seeing this higher highs and higher lows kind of elucidate itself out with the gold and
I mean,
silver
look at
price.
gold, Danny. Look at gold. It's outpaced everything but Bitcoin since
Yep.
2000. It's averaged 9.9% compounding per year. The S&P 500 with dividends reinvested is 9.4. It's doubled the performance of the 10-year treasury. It's the tortoise. It's not sexy. People don't notice it, but yet it's averaged nearly 10% per year. That's rock star. Richard Russell, my mentor, God rest his soul, used to say, you make 7% per year compounding, you're a rock star. That's kind of the problem, Danny, and we alluded to that at the beginning. The public instant gratification is not fast enough for the public, and it's not the way markets work. This is a very unusual time where fortunes are made in a very short period of time in Apple and Bitcoin and Nvidia, and that leverage does cut both ways. So, my advice to people who are sitting on all that profit is to understand that profit is not a 4-letter word, and it's a 6-letter word. And take some profits, put it in real assets like gold and silver, even Bitcoin. Anything that gets you out of the system, I think is very important. It's time to be a contrarian. It really is. And there are ominous clouds lurking on the economy, and I think the biggest place to see that is in the reinversion of the yield curve, and the banks not lending, but the banks are the ones that are reinverting it because they're plowing their money into short-term treasuries, which are pushing down the rates of the short-term treasuries, which is reinverting it. It's not the other way around where, the market is the long rates are going higher because the system is healthier. No, it's the other way, which is very ominous. Instead of it happening naturally where things are good, you got the big money who knows what's going down saying, I'm not going to lend my money to Danny and Andy. There's too much risk there. Let's just put it in treasuries and make 5% short term. So they're loading up in short term treasuries, pushing down the yields, reinverting or uninverting the yield curve. And every single time since 1950, that tells us recession. The economy's in trouble. It is. And I hate to come on a show like this and just be nothing but a buzzkill the whole time, but it's true, Danny. And I think you have to at least acknowledge it. And that's the part that's the scariest of all, is that, guys like you are the media. You watch the mainstream media, you have no idea what's going on. None, zero. Most people don't know what bail-ins are. Most people don't know what that gold is, a tier one asset. Most people don't have any idea what the BRICS are. I mean, on and on and on. And these are very, very important topics that our media has done a horrible job, in fact, no job whatsoever, of alerting the people to. So God bless a guy like you who has the courage to get up there and allow someone like me to talk about this and to cover it. In my opinion, it's more important than anything ever that we are on the verge of the majority of the human population looking to a new settlement vehicle for energy. It's been the dollar for 50 years. That synthetic demand has created a lifestyle here in the West that you could argue is, we were living above our means, and largely by the good graces of the foreign creditors who are now going the other direction. Instead of China and Japan and Saudi and Russia and India, it's now the United Kingdom, Ireland, and Cayman Islands. Really? Well, I know for a fact that Ireland and the United Kingdom are broke. I'm not exactly sure what the balance sheet looks like in the Cayman Islands, but the point of it is that things are changing and you have to either accept it and realize it or not. But when I sit here and talk about gold and silver, it's wealth to me. It's just simply wealth. And 5,000 years after it was talked about, I don't know how many hundreds of times in the Bible, you got the biggest money in the world loading up on it and repatriating it, removing counterparty risk. That's the big part of all of this to me, is that bringing it home from the Western exchange platforms and holding it themselves. And then when you put it together with the new Enbridge unit currency, where the white paper says the gold that will be used and redeemable for the new unit token will be held within the borders of the countries that possess it and independently audited. So that makes sense to me why they would bring it home. Now, the BIS, this is how they do things. When the BIS reclassified gold in 2019 as tier one, do you think there's any coincidence that out of nowhere, after 6 years of gold going down and central banks selling it, that the Bundesbank, the Bank of Hungary, Turkey, Poland, the Czech National Bank, Bank of Austria, the Dutch National Bank, they all brought their gold home from the New York Fed and the Bank of England in 2017, and then went on a massive buying spree in 2018 and 19. And then, oh, by the way, gold's tier one. You don't think they were told this? I guarantee you they were told this. Just like BIS is behind this new Project Enbridge, which Saudi Arabia is now a full participant in. And I guarantee you they said to all of these countries, bring your gold home, because Enbridge and the unit token, which is now, this is what we have agreed in principle of doing, it's going to be held within your own borders. So start buying gold and bring it home. And that's what we've seen over the last 2 years, massive buying of gold, massive, by the central banks using the suppression of the Western paper market to run cover. But the key to it all is the repatriation. If things were normal, they would leave it where they always have left it. Why did Bank of India bring home 100 metric tons that they've held since 1991 at the Bank of England? Why? Because they know that this new settlement currency will be tied and pegged to gold, and you can hold it in your own borders. Remove counterparty liability. And the West has shown that, we don't care. If we don't like what you're doing, we will keep it. Look what Bank of England did to Venezuela. Can we have our gold back? No, don't think so. So all of these countries are like, screw you. We're going to take it ourselves. We're going to hold it ourselves. We're going to come up with a new system that the West won't be able to dictate what we do, and worse yet, steal our funds. And when you see the United States steal $5 billion in treasures from Russia, that's what they did. They didn't sanction, they stole it, they defaulted, and use it to buy weapons from the military industrial complex who wants to hold the price of silver down. so they can make 5 billion worth of weapons to give to the Ukraine to fight a war against the country they stole it from. And now you got Saudi Arabia saying to the European Union, you guys are idiots. And if you take that interest, that 4 or 5 billion in interest accumulated on the 280 billion in the European bonds that Russia holds, we will start dumping all of our European treasuries, starting with the French treasuries. They warned them that just last week. So you got the European Union and the United States, the Western hegemony that has ruled the roost for 500 years. Pardon my French, but they're shitting the bed. And they are making the rest of the world look at us like we're a bunch of idiots and a bunch of hypocritical dictators who can, at their whim, take what they want. Now, I'm not. This is no statement on Putin or Russia. But what I am saying is that it is not for anyone's the world reserve currency or the European Union to decide who can do what with investments or money. It's not for us to make that decision. And Lord knows that all of us, the West, the United Kingdom, the European Union countries, and the United States have their own, demons and their own skeletons in the closet, and yet we think we can go around making these sanctions, these confiscations. And the worst part about it all is we confiscate those assets and give it to the country they're in a war against. That's why all of this stuff is happening. But I will tell you, I think they're smart enough to understand, they being the BRICS nations, this has to be done methodically. You can't let the world on to what you're doing. This is why China isn't telling us how much gold they have. This is why, they've been mining 400 to 500 metric tons a year for 25 years, and they tell us they only have 2,600 metric tons. Alistair McLeod will tell you they have over 40,000 metric tons, which is 5 times more than we have. And everyone says, well, why doesn't China tell us how much gold they have, or is it understated? Why don't we? We haven't had Fort Knox audited since 1953, and Ron Paul has asked twice to have it audited and was turned down both times. Why? It doesn't do any country good to tell them how much gold they have, especially if we're heading into a new system where the BIS, the most powerful bank in the world, reclassified it as the only other tier one, and it will be used to back a new system, a la the unit in the South. And what did Kristalina Georgieva say, the head of the IMF? Any CBDC that's not pegged to something is fiat. 6 months before that, the IMF published a paper saying gold as an international reserve currency, a barbarous relic no more, ? The IMF knows it too. The world understands that, it's gone full circle, and we're heading back to gold as the tether to a system. It'll be the marriage between blockchain and commodities. That's what the unit currency is on Project Enbridge, which Saudi Arabia's full participant, is not compatible with US dollars, backed by the BIS. And that's what the IMF will do on this side. So, I think prices will go higher than anyone thinks possible, but this is why it's been suppressed. And this is why it's so important to trust your gut and not your eyes, because it will be volatile. It will be difficult. People will think you're crazy. But in the end, just follow the crumbs. You don't have to be an economist to see the crumbs left at our feet. You just have to trust that they're real. And I'll tell you, for the last 4 years, 3.5 that I've been talking about this stuff, I've been right, which is kind of scary. And those crumbs have all led to where I think they're going. If you just pay attention and put them all together, each crumb in and of themselves, you wouldn't figure it out. Lay them down on a table and say, whoa, that, yeah, that's exactly where they're going. And I think that's indeed why they've held down the commodity prices, why they're draining the exchanges, and ultimately where we're going to much, much higher world commodity prices, not just gold and silver, all commodities. I think you will see a commodity super cycle that will, maybe really be reignited and massively ignited as the Fed continues to struggle with this economy and lower short-term rates, which will just jumpstart the inflationary process all over again. So I don't know, Danny. I think we're at the foothills of some very interesting times, man. And that is a Chinese curse. May you live in interesting times.
Yeah, Andy. I mean, this entire analysis that you've kind of just thrown at us. I mean, this is why I highly suggest people look into Miles Franklin. info@milesfranklin.com. Be sure to give them an email to get their special pricing sheet. And don't forget to tell them the Capital Cosm sent you in the subject line. And it's because you understand the interconnectivity of not just the gold market, but the overall market, the geopolitical sphere of things, as well as the economic and military contractor sphere of things. Everything is related, guys. Nothing happens in a vacuum. Okay. So I really appreciate, all the depth of analysis that you've kind of laid out there, Andy. And anything else you want to say before we wrap things up?
I think I probably I probably exhausted people with my rambling. No, that look, I just think that we're in for some interesting times, and I think if you're not a contrarian right now, you're going to be a victim. Not a lot I'd like to add to everything that we've talked about. Just that I think the next 90 days, 120 days will be the craziest of my career, craziest of all of our lives. So if it were me, I'd start preparing. I would start preparing in every way because the last piece of the puzzle with all of this is that if things really get bad with the banks, with commercial real estate, with some sort of an event, what we will see is a massive contraction of credit, a huge contraction of credit, which will lead to problems all the way down the line, even in supply chains. So start protecting, I mean, and preparing. I may have said this on your show before. When people think about the amount of credit that is needed just to bring a loaf of bread to the grocery store, I think they'll understand that with the farmer who has a combine and the seeds and the diesel fuel, they're on credit to buy the $500,000 combine and plow their fields. When they get the wheat, they have to give it to a trucking company to bring it to the flour mill. Trucking company is on credit, as is the flour mill who refines it, gives it to another trucking company who's on credit, who drives it to the baker. The baker takes that flour and bakes his bread, but the baker's on credit to run his operation and then gives it to another trucking company in the form of bread, who's on credit to bring it to the grocery store, who's on credit to stock their shelves. I mean, credit touches that loaf of bread from seed to final product 10 times. And if you see a massive and that's what we're seeing right now. I mean, the banks are not lending. They don't want to extend credit. They'd rather, because they think the economy's in trouble. That's why the curve is reinverting. So what we will see is a slowdown in the economy and perhaps even worse if things get bad. So instead of lamenting how bad things are getting, prepare. Buy a gun, know how to use it, have some bullets, have some plenty of food and water, batteries, dog food, toilet paper, whatever the hell you need, and hope you never need to use it. Donate your food to a food shelf or eat it. Never use your gun. Great. Go shooting at the range. Gold and silver, if you never need to use it, wonderful. Give it to your children or your grandchildren or a church or a charity. And I think that's the best you can do. I think you can survive in what's coming next and maybe even thrive, because having money in gold and silver when the biggest and most well-funded and well-informed money in the world is doing this, to me, it's not just for a catastrophe. There will be opportunities when the dust settles. And because of all of the suppressed interest rates for years, asset prices have gone, crazy. And what are the real prices in an environment where interest rates and price values find equilibrium? I mean, look at that office building in St. Louis, 205 million to 3.7 million. Really? So in 15 years, 20 years. So what kind of values will be out there for people who are outside the system, who have been contrarians, who own gold and silver? Maybe there'll be really, really sweet opportunities. That cabin you've always wanted up on the lake, and wherever that is. For me, it would be northern Minnesota up on Gull Lake. I love it up there. Property value since 2020 went parabolic. Well, what happens when that corrects? So maybe I'll buy a place up there. The point is, gold and silver are not just for the end of the world. They're wealth that will be there for an opportunity as well as an emergency. So I would buy gold, I would buy silver, not to get wealthy, but because it is wealth. And I would prepare like a real hurricane was coming. I live down here in Florida. I moved from Minnesota 3 years ago, and after the first hurricane, it blew my mind, Danny. There's Publix grocery stores on every corner, it seems. Publix, they're a massive company, and they're everywhere. And I'm telling you, within one day, every one of the grocery stores, they were out of everything you would want. Out of water, out of toilet paper, out of paper towels, out of, just gone. And even though they said it probably wouldn't hit where we were on the East Coast side, A lot of people I knew were going to Home Depot to buy plywood to board up their windows. Gone. You couldn't. I had a buddy who was so concerned about it, he was taping pool floaties to his windows because he couldn't find any plywood. So the point of it is prepare and hope you never need to. I think that's where we are. This election and the divisiveness surrounding it, the big BRICS meeting in October, an attempted assassination, $1 trillion in debt every 100 days, open borders, 20 million people in here illegally, 5% that have bad intentions or 1 million people. I mean, on and on and on. And yeah, it sucks always talking about things that are heavy like this. We talked about that off air, but I mean, I'd rather know what's coming than not. And that's what I'm doing. I'm preparing. Hope I never need to access any of it. Be damn glad I have it if not. Um, and I know that won't be any worse for the wearer if I don't need to use any of it, but I think I'll be very grateful that I thought this way if I do. And that would be my message, Danny. And prepare, reluctantly prepare. It's like sitting down with your life insurance agent and going over your own mortality. You don't want to do it, but you have to. You should for your children and your wife or whatnot. Same thing here. So, anyways, I've rambled enough, brother, but I think the moral of the story is to prepare.
Yeah, 100%. I actually do have a quick question for you from my last guest. As you know, we've been doing this little game of telephone where each guest asks a question to the
Yeah.
next guest. And Clint Russell from Liberty Lockdown Podcast, he wants to know,
whether they're a Trump supporter or a hater, I would like to hear from them. Why? What do they expect from a second Donald Trump term? And does he survive to serve it?
I hope he does. I think they would try very hard to devalue the dollar. I think that is one thing that they will do, which would be very gold bullish, which would make our exports more attractive. And look, it's interesting. He is an advocate to have Judy Shelton as the head of the Federal Reserve. She is a gold advocate. She has come out publicly and said the way that you could reignite demand for the U.S. Treasury, even the long-dated treasuries, the 10 and the 30-year, would be to back it by gold, make it redeemable in gold, and that is an inflation-adjusted way of doing it, rather than trying to arbitrarily pick the inflation amount. You have no idea what inflation will be 30 years out. Back it by gold, and it would be. She advocates for a gold standard. The IMF talks about a CBDC pegged to a commodity. What commodity would it be? Well, it's got to be gold, the only other tier one asset. That's exactly what the BRICS are doing. So I don't know. I think it gives us a chance to mitigate our problems geopolitically. It gives us a chance to get our domestic house in order. I'll tell you that the crime and the lawlessness is something that has to change, and I think he would change it. But as far as the dollar is concerned, and the dollar is in trouble no matter if it's him or not, because he would advocate, I believe, very strongly to weaken the dollar, and that would simply mean probably more inflation, lower interest rates. Inflation is here to stay if he gets in. Good for gold, good for commodities, good for the stock market. In fact, I could see the stock market going parabolic, but in terms of number of ounces of gold, it will lose value. In other words, if you're measuring it against dollars, yeah, it'll go up high. You measure it against gold, it will lose, 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 lose. So, good for the economy, good for commodities, not so good for dollars, not so good for low and middle income families who will struggle with inflation. But in general, better because of law and order. And I think the things that have happened in this country need fixing as much or more so than the value of the dollar. The open borders, the lawlessness, the judicial system, the electoral system, they all need to go, every one of them. Throw every one of these idiots out and start over, starting with the Justice Department and the FBI, get rid of them all and start over. That to me would be the best thing that could happen. In terms of where we are in the cycle, we're too far down the rabbit hole to ever really fix things, I don't think, unless we stop spending. It starts with stopping spending, and we're spending $1 trillion every 100 days. We're creating that in debt. So We have to stop spending. We need to get our fiscal house in order. But before any of that can happen, we need to get our house in order. And that would be all of the things that are denigrating this great country. And that to me is priority number one. And I think he would do that. So I don't know that there's a magic bullet to fix everything. To me, it would be a success if they just got this country back, the way it used to be. This Make America Great Again. I'm all for it. I'm all for respecting authority. I'm all for, rewarding merit over lifestyle. I'm all for closing the borders and letting everyone who wants to come here do so, but in the right way and assimilate and contribute. I'm all for believing when I go to sleep at night that when I wake up to see the election results that they will be fair. And I'm all for a judicial system that treats everyone the same way, that presumes innocence, and a media that doesn't completely and totally corrupt it all. So those are the things that to me are far more important than the value of the dollar, which you could argue perhaps, I don't know that anyone can fix that right now, but little by little, that's how we start. We start within our own house. And that would be my wish if he got in. I hope he does. If Kamala wins, I think this country is in big trouble. And I say that, and that's not even a political statement. That's just 4 more years of what we've seen. I think we'll become a socialist country with universal basic income. That's kind of how I think they would like it. She's all about equality rather than equal opportunity. Big difference. And that's where we're heading. 4 more years of the same. So let's hope he gets in and gets our house in order before we worry about the economy.
Yeah, and is there a question you'd like to pose to the next guest as well as the audience before you head out?
You caught me off guard on that one. I'm not sure. I guess the question would be, what is your biggest concern about where we are? Is it financial? Is it social? Is it moral? Spiritual? I mean, these are things that people need to think about right now. So for me, when I say all this stuff, I don't say it as someone who's trying to sell gold. I say it as a father of 3 kids. My youngest being 17. I say it as just someone who thanks God every day that I was born in this country. The least likely cast of characters, myself and my father, to have succeeded over 34 years. And I'm a patriot. And I can't stand what I see in this country right now. So my biggest question would be, what is your biggest concern? And what can we do to address it? So I don't know if that's a super challenging question or not, but I think about that every day. How many people worry about what's going on in this country? If 1% of the people who are in this country illegally have bad intentions, that's 200,000 people. This is something that's not going to end well, I don't think. And when you have all those people in Dearborn, Michigan on TV saying death to America in our own country, there are people here that are not here for the right reasons. So I think we need to get this country back on proper footing, and less about economics and more about what this country stood for: religion, respect of authority, the nuclear family, hard work, the morals that we saw growing up that seem to have just gone out the window. And we just have to get away from a situation that is more lifestyle based than merit based, and start with law and order. So that would be my hope. And that would be my biggest question. What do you think about where we are here in the United States, more so than economically, and what can we do to address it?
Yeah, let me know, guys, down in the comment section down below. What is your biggest concern? And I have to remind you again, hit that subscribe button, hit that like button if you enjoyed this video, and email info@milesfranklin.com and tell them that Capital Cosmos sent you to get their special pricing guide. You're not going to find these prices on the website, so you've got to email them and tell them that Capital Cosmos sent you to get that information. Andy, thank you so much for coming on, my friend. It's been a pleasure as always.
The best, Danny. You get it, and it's an honor to be here with you as often as I am, and I truly mean that. I thank you for letting me chime in, and I'll look forward to picking up where we left off. In the meantime, I hope you and everyone else has a great day, and stay well, man.
Excellent. All right, guys. I'll see you in the next episode. Bye, y'all.